Good morning, everyone. Today is May the 8th, and we are taking a look at the markets very quickly. We've drifted down. As I mentioned yesterday, we've got a swing short on the Metastock event, but that's brought us all the way down into frontline support. That first target, if you'll notice from yesterday's blog image, you'll see that that first target was around the 28.85 level. We've lost that zone. We've faded below, bounced into a lower high, and now that 28.85 to 28.87 area is going to be a little bit of a litmus test. If we can't hold it, we are going to fade. The motion is giving us bounces that lead to selling events, and that is really what we are looking at. Taking a look at the NQ, same sort of thing. We didn't quite come into the 75.75 area, now sitting at 76.02, but bounces very likely to give us selling formations. Take a look at our adaptive moving average. It is very far away, but it's also flat. Remember, in a bullish formation that begins to rotate, we are going to have deep value events sort of trigger price. So you're going to have to look at weekly supports and uh, monthly supports, opens, closes, highs, lows on those very big time frames to see where the congestion event is. We can really essentially see that below 76.60 we've got sellers, and as we just popped into there, they came right back and said, you know what, we're not having any of that. As we take a look at the YM, we drifted well below that edge. Take a look at this. Old resistance, new support. That's going to be the line in the sand. My suspicion is that we are in the middle of our first bounce zone that's going to take us back up into the range that will give us a real failure event. Could we turn around and just really run in the opposite direction, downward? Yes, but I think it's more likely that we sort of try to level out. Remember, there are a lot of buy the dippers around, and those buy the dippers are going to say, you know what, I got faked out here and I didn't buy the dip. I got faked out here, I didn't buy the dip. You could go to a million different places to see the chart really holding that edge. And what I suspect is that because we've been in a trend, that first pass event, that rounding zone that sends us back up into heavy congestion that fails, is what we're going to be working on today. So today, potentially a buy the dip space. We are also looking at a Wednesday that tells us we've got the EIA on the horizon. That EIA, don't really know where that one's going to sit, but I can say this from a 6 hour perspective, we're still holding 60. We've got a flattening action here. Notice, with this flattening action and the change in the color of motion, we're either going to pop up and rotate back into resistance, but it is going to be resistance. See, so that means if it fades, excuse me, if it holds this zone, all right, so let's use a line right here. If it holds this zone and breaks up over that edge, it is very likely to come back and give us something to look at. Notice the flattening formation giving us this idea that traders are trying to hold this edge. You know, it is bigger than 60 in my mind. All right. And so if we lose this area, this is the next pocket that we work on. But like all the charts that I am seeing right now, we have resistance, it's coming to support. Traders are going to try and dance around there, and then momentum is likely to take us back into the resistance zone. How do we know if we're wrong? That's not going to happen. It's going to fail here, bounce. This is going to stay low, and then we'll trade intraday short. If it holds, as it is right now, we wait for the pullbacks to go long, not the breakouts, because this is a negative formation. A breakout level will collapse and dig deeply. So your risk is open and much wider than if you take it on the pullback. Lastly, we'll take a look at gold. Gold's the very interesting one. Listen, we know about this 1290 to 1291 area. My thought is that we reject this zone at the first pass, but because of this particular motion and this motion here that says, hey, I might be recovering, I'm fairly sure we've made our lows. The question is, do we pull back and retest 80 to move forward again, or do we jump out over this edge and just pull back? Do not consider chasing these longs. They are much better if you wait for the fade action, because we're looking for bounce action in all the broad indices. Okay, so this would naturally fade if the rhythms were holding correctly. Just say, be careful, be alert, bounce zone action likely today, and seeing a bit of it, but lines in the sand everywhere. Good luck trading.